Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day and the trading week, I'm Kailey Leinz with Kriti Gupta, counting you down to the closing bell, and here to help us take things beyond the bell with a global simulcast. We're joined now by Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And of course, most of those moments, Carol, came before the opening bells rang when we got economic data and a slew of corporate earnings.
Yeah, it really set the tone and sentiment for this rally. I should say we're just rolling over our best levels of the session, but still the outperformance in the tech sector. You know, I don't know, irrational exuberance, 1.7% higher on the Dow this week so far, Tim, 2.5% higher on the S&P, and 4.3% higher on the NASDAQ.
I mean, we'll see. We have a lot coming next week. We have, the jobs report for the current month that we're in coming on Friday. And then, of course, we have the Federal Reserve meeting that kicks off, and we'll hear from Jay Powell on Wednesday. The question is it going to be 25 basis points like everybody thinks? Probably. What do you think? I don't have any intel, but nobody's really pushed back hard lately, given the direction that economic data is going.
It's not that, though, that really matters, right? We can talk about this later. But it's what Jay Powell says, right?
What does he say about March?
Does he stop? All right, guys, should we talk about the markets?
Yeah, okay, this is a lot to digest, of course, 25 basis points. But look, the question is this the last 25 basis point hike that we are going to see? I think that's going to be the real question, Kailey, when it comes to whether this market rally is actually sustainable.
Yeah, well, certainly it tried to sustain the rally today, although as we drew closer to these bells ringing, as you hear now, things got a little softer. The S&P 500 only ending the day higher by about 0.25%. 4,070 looks to be where we're going to settle. The outperformance, though, on the day really came from technology. Those mega caps driving a lot of the index. The NASDAQ up about 1%. Of course, you had some semiconductor weakness as well. But overall, if you put the stocks index aside, it was a positive day, Carol.
Yeah, I think it's really good to, talk about the day, but talk about the week. As I said, really some outperformance among the NASDAQ this week, up more than 4% for the week overall, and up about 2.5% on the S&P 500.
Well, certainly something we're going to be keeping an eye on. But, Carol, it's all about whether or not this rally is sustainable in my eyes. And I have to really ask, what is underneath the hood of this rally? We talked a lot about it. It's tech, but a lot of it, a good chunk of it, is Tesla. And I think the last time I checked, 35% of the upward move in the S&P 500 was just that one company. You can really see it on a sector basis. The S&P 500 on their auto and components index, that's the one that Tesla is inside, way ahead of the pack, up about 9.1% on the day. Take a look at it. Not far behind it is some of those tech names as well, your Apples, your Amazons, your Microsofts, that all fall below those categories. But look at what's lagging. The commodity story that, by the way, has also been on fire lately. The idea here, the commodity prices have been rising, oil stocks with it. Today, it is the exact opposite story. Energy is your worst performer when it comes to a sector basis, Carol.
All right, guys, let's get to some individual gainers in today's session. We talked a lot about credit cards today, this week overall, because you had MasterCard, Visa, and American Express reporting. American Express finishing just off its highs of the session, so good for a gain of about 10.5%, 10.6%, top of the S&P 500, surging the most in over 2 years. Profit revenue forecast surging above analyst estimates. Keep in mind, though, total volume on its network, though, did fall short of estimates, but the CEO says earnings per share will increase more than expected, so some enthusiasm in terms of that name. Tesla, Kriti, you talked about it. We've been talking about it throughout the day. Just finishing off its highs of the session, up about 11%, top in the S&P 500 and NASDAQ 100, up 6 days in a row. Check it out, up about 40% in the past 6 days alone, riding the momentum coming off of earnings this week. And the other thing is you've had analysts coming out. None of them have really changed their recommendations, guys, but they have been raising their price targets steadily and by a lot. And so that enthusiasm really carrying over, continuing in that Friday trade today. And then I just want to mention Lucid. It wasn't Tesla that was number one in the NASDAQ 100. It was Lucid, which was up, bring it up 43% here. Traders circulating a Betaville report that said the Public Investment Fund, they invest billions of dollars on behalf of Saudi Arabia, that they're developing plans to buy the remaining stake that it doesn't own. So this one was on a tear today. Speculation, though, is described as uncooked, a term that Betaville blog often uses to refer to market gossip. But nonetheless, investors buying that gossip. I will point out Lucid was up almost 98% at one point, so it did pair some of those gains.
43% for Lucid.
Yeah.
You got the gainers, Carol. I got the decliners. Let's start with Intel. Certainly the big story playing out in the chip sector today. Finishing the day down by 6.4%. It was down as much as 11% earlier. The company forecasting one of its worst quarters in its history. We did see a broader sell-off in chips as a slowdown in PC sales just continues to weigh on the industry. Let's talk toys. Hasbro finishing the down 8.1%. It is one of the largest toy makers in the world. Think My Little Pony, Play-Doh, Transformers, and more. The toy and game maker reported weaker 4Q sales. It fell short of analyst estimates. The company also said it would cut 15% of its workforce. That's about 1,000 jobs after a disappointing holiday shopping season. And then Colgate-Palmolive shares finishing down by 5.2%. This after gross margin and volume performance in the fourth quarter trailed the average analyst estimate.
All right, well, we've talked a lot about stocks. Let's not forget about the bond market either, because we did get some economic data today. PCE deflator month-on-month and year-on-year coming bang in line with estimates. You also have the UMich data that shows consumer inflation expectations are going down. All of that fueling the case, as we all were talking about earlier, 425 basis points coming from the Federal Reserve next week. The 10-year yield on the day up 2 basis points to 3.51. The 2-year yield on the day up 2 basis points to 4.2%. All said, a pretty quiet day in the bond market, Carol.
Right, but that bond trade really playing out here, right, in 2023, which is interesting. And I do think our focus has to go to next week, right, in terms of the Fed meeting, the jobs report. There's a lot coming at us and some really, really big earnings. We're talking about Apple, Alphabet, Meta, Spotify, NXP, semiconductors. So there's going to be a lot coming at investors, and we'll see how the trade, whether this optimism and this risk on trade, especially in the technology trade, Kriti, whether or not it continues. You've talked with us a lot this week that there's been conviction behind some of this upward momentum.
There's absolutely been a lot of conviction. You're seeing that with a lot of these tech names. Like you mentioned Tesla specifically, Apple, Amazon, Microsoft. You need tech on your side. But another big theme that's been happening this week is how much money is actually staying in the United States, whereas it rather going to Europe, going to emerging markets. And that's actually a question that I think we're going to get a lot of answers of. The ECB, the BOE, and the Fed all coming out with decisions next week, Tim.
Oh, my.
Yeah, it's certainly going to be a big one to watch. It's interesting to see the narrative change around Europe potentially being in a recession or already being in a recession. The way that we've seen the commentary around that shift, Kailey, in recent days and in recent months when, 8 months ago, the big concern was, okay, because energy prices went so high so quickly, there was no question that Europe would be in a recession.
Yeah, the weather gods blessed them.
Yeah.
In many ways, it's the weather that has made the difference for Europe. When we think about the U.S., though, specifically in the prospect of a recession or a soft landing, I am really interested to hear the tone from Chairman Powell around what he is seeing in the economic data in regard to the U.S. economy, because given how soft landing expectations seem to have built, as have expectations for a Federal Reserve that's going to cool their roll a little bit, how easy is it going to be for Chairman Powell to push back against this? And how much could that take the market by surprise?
Yeah, I think it's kind of interesting, right? Here we talk about this Goldilocks potential landing for an economy, a soft landing. And it does look like, if you look at some of these data points, especially with inflation rolling over, but the job market, maybe we're starting to see some softness, but still, for the most part, staying strong. To me, it just gives some more evidence or strength to that kind of argument, Kriti, out there, that could we see potentially a recession, a bit of a slowdown ultimately, but with a job market that kind of holds on.
Yeah, and I think the narrative has really changed, to Tim's point of changing narratives around what this recession is actually going to look like. We went from a job-full recession to a recession that may not necessarily really even register as a recession in retrospect. So I think that's a really big part of the equation.
Unless you lose the job.
Yes, that is true.
Hopefully that doesn't happen.
No, but you know what I mean, right? I mean, people are losing jobs. We're seeing it in the headlines.
They are, and a lot of the companies and the big tech companies have hired more in the last 2 years than they've laid off in the last few months, and a lot of these companies are still hiring. And fortunately for a lot of these tech workers, they will easily be able to find jobs, at least right now, for other companies and in other industries. I think a big question is Powell going to rain on the parade of financial conditions loosening? Is he a little too? Is he going to be concerned that financial conditions have loosened? Is he going to be concerned about the market rally that we've seen in the first 3 or 4 weeks of the year?
I think that's a really good question, Tim, because we've seen him push back against the market in the past. So will he do that again is going to be a big question for Wednesday. And then really, ultimately, how much is what the Fed does going to matter when you have $5 trillion worth of market capitalization reporting over a 24-hour period? That's going to drive a lot of the action too, Carol.
What I really want to know, this is so serious, who charged the $75 million painting on your Amex? Was it one of you guys?
Oh, I wish.
It's a
Ask
great
David
story.
Solomon, although he only made $25 million last year.
You can do it. You can do it. All right. For more, you can obviously go to Bloomberg.com. Guys, that's a wrap. Our cross-platform coverage, radio, TV, quick take, and of course, Bloomberg YouTube. Did I miss
We're
that?
everywhere, Carol.
Metaverse?
We are everywhere.
It's such a Friday,
Yeah.
such a Friday brain. All right. We will see you again, same time, same place on Monday.